Bill Baruch joining us here from Blue Line Futures. He's with us here to take a look at some of the recent price activity in the energies. Bill, welcome. We were just talking about how it's been a big week for indices traders, but also for crude traders. Many would argue that the bulls need not be concerned as long as crude holds up above 35. As I look right now, I know it's been a bit under pressure here, but it is still holding that level today. 35.65 right now, down on the day by about 4.5%. What do you have your eye on in terms of key levels to keep an eye on in terms of price decay here?
Although I do agree with you, it needs to hold what I'm looking at 34.80.
Okay.
Previous support, 36, high 36, 36.95, 37. That's now big resistance. And I have a momentum indicator I use. That's coming in right now, and it's going to start aligning with that. That's going to create a really, really big ceiling for rallies. Now, I'm not bearish on crude oil. I've come on your show probably the last couple months saying I'm waiting for a move like this to really start to position. So this is nice. I'm licking my chops here. I think that there's going to be a good buying opportunity. But what we do need to see is we need to see the COVID situation contained, some of these restrictions and lockdowns abated, which we don't know that's going to happen yet. And then OPEC needs to push back their production cut taper that's set for January 1st. Without any of that, we could see $30.
Okay, now I like that, and that's a good reminder. You were somewhat bearish crude, but not necessarily looking to trade it to the downside, more in terms of a corrective type pattern to play out here with ultimately kind of, as far as I remember, you were kind of looking for that long opportunity on this corrective type move. Now, we just pulled up the chart here. You can see the move. We took out the September lows, but do you think there, again, some of the contributing fundamental catalysts that we've been talking about, whether it be the coronavirus numbers? I mean, I don't think there's been a lot of focus on inventories this week, but they did see a rise, and that did attract some attention. And ultimately, you've got the U.S. dollar, which seems to be firming a little bit here. I mean, what are you looking here in terms of fundamental catalysts right now? You were talking a little bit about stimulus, but aside from that, because that seems to be a little bit unknown still, and we're in, well, much like the Fed, a wait-and-see mode as far as that goes. What are you looking here as far as some of the other potential market movers here?
Now, I don't want to be the one that just avoids any type of losing trades. I take losers, too. I had bought some call spreads, and I may or may not have been on your show last week or the week before, saying I want to give myself a position in here to find risk in case the 50-day moving average goes above that 200. We get that breakout above about 41.80, and that carries us to $44. I wanted to be in there, and I wanted to participate in if that were to happen. So those call spreads, they've lost money. So again, I'm looking for a bigger position, getting longer in the 35 range. That's what I've been waiting for the last 3 to 6 months. So I think patience here is really going to be important, because the fundamentals, as you mentioned, what are going to be the fundamental catalysts? And now we don't have any stimulus from Washington ahead of the election. We didn't expect it ahead of the election, but I think we'll get it coming out of the election. It's also not uncommon to see volatility ahead of the election, too. And we saw the equity market and markets broadly down, what was it, maybe 5 to 7 sessions ahead of the election in 2016. And we all know what happened afterwards. The markets rallied strongly. So I expect something similar, because what you're doing here is you're seeing a ton of uncertainty on the table, and then you're now going to remove some of that uncertainty after the election. But again, I think the COVID situation needs to get contained. These lockdowns they're taking place in Europe are really hitting crude hard. And then we need some comments out of OPEC. And I think OPEC is sort of lurking in the background. They want to get through this election, and they want to kind of see the landscape stable a bit. And then we'll see some comments from OPEC. And I think that could provide the tailwind that get us back up to 41.80 and where we would need to then break out.
I like that, Bill. We haven't heard a lot about OPEC recently. That gives us something to look into or to keep an eye on coming out of the elections. And they have sort of fallen a little bit below the radar here for us. So I'm glad for you to remind us, and potentially they could be one of the contributing factors here. You mentioned trading, and hey, I always talk about how loss is part of it. You need to be able to accept that, and if you don't, you're going to, basically you're going to get run over. Well-defined strategies are always good ones, especially when you're kind of getting in front of momentum to the downside in terms of what we had been seeing and you were talking about. So no shame there, that's for sure. Let's talk a little bit about natural gas. Let's talk about what we're seeing in terms of the recent bid. We've been talking about colder sooner than expected, and well, certainly we have some issues with the recent hurricane and how that's going to impact some of the supplies as well. But ultimately, we're seeing a nice bid there. And I did want to point out here, we saw snow 2 days in a row, I think it was, in October here this week. I think it was Tuesday and Wednesday, or maybe Monday, Tuesday, I can't remember. But obviously colder sooner than expected is factoring into some of the bid we've seen here.
Absolutely. And we started to see that, I think it was the end of August, where the market started to move. I think some weather patterns had shifted. Obviously, the hurricanes as well had kept a bid under the market. So I think there's a tailwind higher in natural gas. And I wouldn't be surprised to see that continue. But right after, right as we start to price in what could be a earlier, colder winter, when you start to see it, you start to get excited, you cannot chase this, because then it's going to get priced in. It wasn't a very, very bullish summer at all. We saw inventories continue to get padded well above 5-year averages. And that's something to kind of remind yourself when you're thinking about chasing natural gas. I don't love it right here. I'd rather see some of the situation sort of calm, get through this hurricane season and then find a better area to get long and take a shot long for that potential of a colder winter. But I don't think you buy it up here in anticipation of a colder winter.
I like it. Talk to us here a little bit about, well, we oftentimes look at, in addition to crude as kind of that barometric kind of indicator as far as economic conditions, but oftentimes we look at copper. And we've seen copper reflect some of what we're seeing here in terms of sentiment as far as the indices, concern related to coronavirus numbers, the selling we've seen related to demand concerns for crude oil. I mean, when you're talking crude, when you're talking copper, obviously we tie a significant amount of that discussion back to China, demand there. We've been seeing some pretty good numbers coming out of China, but hey, with these coronaviruses on the rise here, I'd imagine this is a global issue, and we're talking about now, not then so much. Ultimately, price in terms of what you're seeing as far as copper, kind of tied into what you were just talking about as far as crude and some of the demand concerns, Bill?
Absolutely. Copper tried breaking out last week, and I think it tagged 320.
Yeah.
It came back pretty sharply to close the week, and now we're seeing some extension lower. I do think copper is going to have a time to break out. I think it's starting to show you what it wants to do, what it can do when more of a stable fundamental landscape, given the virus. So there's a lot of uncertainty there coming back in, but we've seen strong data out of China. China's GDP numbers weren't really anything to write home about, but it was the industrial production, which was more of a more front number. The GDP was more of a lagging indicator. So I think you're seeing solid numbers out of China. But what I also like about copper is to get through this election, get the fiscal stimulus, get some infrastructure spending. Remember what copper did in 2016 after the election? It just ripped higher because of all the anticipation of infrastructure spending. So whether it's Trump or Biden, I think we're going to get that. So I like copper. Again, same way as natural gas. Let a lot of this settle in. And I think across the markets, whether you're talking about copper, natural gas, crude oil, or just different stocks, different tech stocks that are coming in right now. There's definitely some big ones on my radar. In the chip sector, I'm seeing with all this news. Be patient. Wait for the market to come in, get some good levels. I think we're going to see risk assets higher over the coming months once we get through this election. Where I would begin to get worried is then as we look into January and February. So what's going to happen there is we're going to start to see inflation come. Now, this is a deflationary period here, given what's happening with the COVID-19. But I think if we kind of get through this little bit of pocket and it stabilizes, you're going to start to see inflation continue to uptick. You're going to see the stimulus come in. That's going to be another tailwind for risk assets, a tailwind for inflation. But the treasuries, I have been positioning bearish treasuries. And I've been coming on your show for years, bullish treasuries. And I've always been bullish treasuries. This is an intermission here. I like being bearish treasuries. Look for the treasuries to go lower. I'm positioning with put spreads in the 10-year. I'm doing futures in the 10-year. I'm going to January. I'm going to February. I think the 10-year is going to go lower. 10-year futures, we're going to see 1.25 in the rate. And that's what we're going to see heading into January and February. And that is going to be a bit of an inflection point for risk assets as treasury yields rise. All
right, more stimulus to come, it sounds like Bill's saying. We're going to see higher copper prices potentially as a result. We'll see interest rates on the rise. Crude even potentially could find some support here at some point. It seems like a lot of this is pending on the elections as well. Bill, I like what you're talking here. Patience, you're talking good levels, risk, well-defined strategies. This is my language. Bill Baruch, always appreciate you joining us here. Great breakdown, talking commodities and kind of teasing that discussion, the energies discussion a little bit with metals and the tie to copper there. Bill Baruch, ladies and gentlemen, is the president of Blue Line Futures. Bill, have a great end of your week. Ladies